Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, April 29th, 5:32 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. State of the market, we're in a mild correction. Check the trend gauge over here. We've got leaders at neutral with a green sub arrow as we're about 6 weeks into this basing period, this mild correction, and that quite a few leaders are starting to form up bases and have improved their performance over the last week. And the FOMC on Wednesday might have something to do with that if Jerome Powell says the right thing or the wrong thing. Kind of interesting that one man can wield that much power. But also that day, we've got QRA, which is a quarterly refunding announcement that is tied to the amount of treasury bills and bonds that will be issued. There was a preliminary reading that came out today, and the market initially had a failed breakdown on that. So, but a strong close corrected that. So, anyway, we look forward to Wednesday. Also, a 30-year bond auction on Wednesday. So, lots going on there. And the market may just be in chill mode until we get that data. So, what happened today? Well, first of all, what happened over the weekend? Ted and Connor, with their inaugural weekend walkthrough video, got twice as many views as anything I've put out recently. So I'm just going to go ahead and retire and hand it all over to them. So thanks for listening and have a great day. You know I'm kidding, right? My day wouldn't be complete without a wrap up video for everybody out there. So anyway, what happened today? Tight range, false breakdown, strong close. Here are the final numbers. 21 over 21. This is the list for this week, and we'll go through them as part of this video. Up 0.6%, 15 of the 21 higher. The big eight, Tesla, Elon Musk flew to China, got the Chinese to agree to him working with Baidu to okay full self-driving, and Tesla up 15.3% on that. Now, Tesla is not as highly shorted as you might think. So this is just some true buying by institutions and individuals going on here. So anyway, we've changed, we put Tesla back into our big, updated the big seven. Now it'll be the big eight. So it'll include Tesla and Netflix, as well as the six common that are in the rest of the big seven or mag seven, whatever you want to call them. But anyway, up 1.43% today with Tesla included in. RG8, this is our 8 growth ETF composite, up 0.8. S&P 500 opened up 0.3, closed basically right there. Equal weight S&P up 0.7. That's good to see because that means the breadth was there. NASDAQ 100 up 0.41. Equal weighted NASDAQ 100 up 0.5%. Dow up 0.4, mid caps up 0.6, Russell 2000 small caps up 0.7, Global 60/40 up 0.35%, in-house. Our GROTECTION flagship portfolio up 0.16%. We'll show you what dragged that down today as we go through the 21 over 21 list. Let's get right into it. We'll start with the S&P 500 here. And we closed just a smidge above the 21-day moving average on Friday, a little bit higher above relative to that on today. But you see that red line, that's the 50-day moving average overhead acting as resistance right now. So right now we are stuck between the rising 8, that's the purple line, the basically flat 21, and the slightly rising 50-day. And I imagine that this will resolve one way or the other on Wednesday with FOMC. Onto the NASDAQ 100. Similar setup, above the 8, above the 21, below the slightly declining 50-day moving average. Dow Jones Industrial Average. This is the only one of the indexes that has yet to clear the 21-day moving average. And you can see the 50-day declining there as well. After a week and a half of relative strength, while the rest of the market struggled, led to the downside by tech, back to relative weakness over the last 6 sessions. is the Dow. Mid caps, we'll look at the index chart, clearing the 21-day moving average today. Nice positive slope still on the 50-day moving average. So that will the mid caps will set that in its sights if it can hold above this 2,900 level. And the Russell 2000 index also clearing the 21 today for the first time in 3 weeks. Slightly declining 50-day moving average overhead. The VIX pulled back today, now breaking below the 15 level at 1467. This is what we'd like to see. This implies some fear coming out of the market. Market does its best work, or has over the last 6 months, with the VIX below that 15 level. Dollar weak today. It's consolidating above this 21-day moving average. Expect to break one way or the other. The FOMC may have something to do with that as well. But over the weekend also, the yen, let's look at FXY here. This is a chart of the yen. Overnight gap down, and then the Japanese government intervened and bid it up higher. So positive by the end of the day. Was one of the reasons for the strength in the dollar last week, was the weakness in the yen. But that crisis averted, at least for a day. I'm going to set a low below an alert below this 58.65 level. I know we were below that, the equivalent of that overnight, but by the time we opened in the US, this had been bid back higher. Precious metals, start off with silver. Silver down a smidge. You can see the tight 6-day consolidation there. Gold down slightly, 6-day consolidation there. Strength in gold stocks, though, recently up today by 0.5%, and that's a closing high inside this handle. We had this big violent spike higher and reversal 2 weeks ago, but gold stocks outperforming. On to Bitcoin, showing a bit of weakness, but did close at the top of the range. I did it again. One of these days I'll break that habit. IBIT closing at the top of the range, but still my comment still stands. Closing at the top of the range, but down 1.24%. On to bonds. Bond prices up across the board, meaning yields pulled back a bit. There's BND, that's the average. TLT, the long bond, up, meaning you're going to see a bit of a drop. And for now, we're looking at a failed breakout here on rates, with 1 day up on Thursday, 2 days down Friday and today. TNX next, 2 days down. Again, looking at a false breakout on that as well. That's good for stocks. All right, let's go to the tail of the tape. You can pause this. So at 3 p.m., Treasury financing estimate came out for Q2 and Q3, and it was higher than what was expected. And initially, stocks dropped through the floor. Let's look at a 5-minute chart here. And it didn't last long. It was harsh, worse on a 1-minute chart, but then immediately bought up and strong into the close. So a failed breakdown there on that news. Day count, we're up 5 of the last 6 days on the S&P, 2 days above the 8 EMA with an upsloping trend line. First close back above the 21 with a flat, basically flat trend line. Expectations neutral. We need to see more strength, and we need to see how the FOMC resolves. I've said FOMC way too many times in this video. So sectors today, strength. Oils, despite the fact that oil itself was down. Semiconductors, and then a strange 5 sector combination of strength. Basic materials, industrials. Why? That's consumer discretionary, and that's basically all Tesla. Utilities and real estate to the downside. The dollar, regional banks, financials, XLC, that's communications, as Meta and Google both pulled back. Transport's also weak. So into the portfolio, early strength we added to Hood. We also bought VDE, that's in a broad energy ETF, on the follow-up strength of Chevron and Exxon since its earnings report. Those are a big percentage of that, and also of XLE. This one's a bit more diversified than XLE. is why we went with that. And we also, A Lab gap down at the beginning of the day. We got a starter position in that right above 80. We'll take a look at that. But the net result of that is to raise our beta, adjusted beta from 0.72 to 0.85. Bottom line on the day, tight range, 3 p.m., false breakdown, strong close, FOMC Wednesday. Promise not to say FOMC anymore. So let's get to the 21 over 21 list for this week. And let's see how we're going to sort it. We'll sort it by what we own, and then we'll go into the rest. First, let's talk about what was dropped out and why it was dropped out. And basically, it was because of um, better names. We started off with TBT. We cut this on the false breakout on interest rates. And also because we got much better growth stocks to include in it. We dropped Google because um, we spent enough time talking about the Mag 7. We don't need to have a big stock like that in here. We dropped GPC, Genuine Auto Parts, flagging nicely, just not enough relative strength there. We dropped AVB. This is a REIT. If growth stocks are going to work, we don't really care much about REITs. They're going to outperform a REIT. Republic Services, again, just a chart looks okay. It's consolidating, just really doesn't have the relative strength that we would want. IFF, fragrances, up nicely today, but again, not the relative strength that we really are looking for. Texas Roadhouse, we replaced this with Kava because we bought Kava last week. That looks just fine, but it has earnings later this week as well. We cut Exxon because it closed below the 21, but regained the 21 by today. And and I'll show CVX right now also, and the strength in those is telling me that oils are going higher, barring a change in that action. So VDE, I'll quickly show that. That's the energy ETF that we bought. Very nice support there at that 130 level. AEM, we dropped it, replaced it with GDX because it's really, when these stocks make a move, it's a group move and you're better off in GDX or NUGT than any individual name. And we dropped Schwab because we own Hood, and that's overlapped in the portfolio. All right, so that's what we dropped. Let's go to what we hold and what's still in there. So First Solar, and if you got a green flag over here, that means we own it in the portfolio. First Solar flagging nicely above the 21. Spotify holding on to the 21 after some volatility after its earnings report. CEG, 3 tight closes in a row above the 21. VRT, just really looking like it wants to go higher. Great volume pattern since its earnings report. GDX, this is the gold and silver miners ETF that we own. Kava, really looks like it wants to go higher too after that big day on Friday. NVIDIA, we added this back to the portfolio. This pulled back right and tested the 50-day moving average and bounced right where it needed to. So that is a key level to trade against. And we've got the 21 and the 50 moving averages stacked up there together. Hood, as I said, we added to this on early strength. It reversed, closed right on the 50-day moving average. ALEB opened weak for no apparent reason. And the opportunity you get to buy something that's looking like it's in a, first of all, it's a key player in the data center build out for AI. No reason that we saw for the gap down. It moved down near this 80 level, which is kind of a reference area round number. And it also gave us a very good risk to reward versus the 21-day moving average. So got a starter position in that today. BDE there is the Vanguard ETF that I mentioned that we bought. We also own IBIT, but that's not really a 21-21 candidate. So here are the carryovers. RTX, there are a couple other defense names that you could have in here as well. CCJ reports in the morning, but firming up very nicely. FCX had a great day today. So did SCCO. That could very easily be in here as well. Coupang has earnings next week. It's riding the 8-day higher. SE also looking fantastic, both internet retailers. Goldman Sachs continues to move higher. UAL flagging nicely after a big move up on earnings. American Express going sideways after a nice move up on earnings. Generac has earnings in 2 days. It pulled back today on heavy above average volume, but held the 8 EMA. GE Vernova, this is also a key player in AI infrastructure. A nice day today. Micron sitting right there on the 21-day moving average, and Datadog, and those last two are also AI infrastructure plays. Light volume pullback on Datadog today. So that's going to wrap it. It's a 21 over 21 list. As always, like to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, my partner Dan Stewart is dan@revereasset.com. Flagship portfolio GROTECTION has a dual mandate, just like the Fed. A dual mandate, a different mandate though. Our mandate is to grow assets in uptrending markets, pull back when they go sideways, and get out of the way during downtrends. And if you like this approach, reach out to us. It's a common sense approach after all. What other aspect of your life do you not take action if things start going wrong? It's just Wall Street brainwashing that you have to stay in the market all the time, because if you're not in, they can't collect fees from their products. It's that simple. It's a massive conflict of interest. And with that, I'll wrap up the video for Monday, April 29th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.